Hello, hi. Yeah, I just want to continue a bit more on the Baba stocks, potential 2x companies to invest in. As I mentioned earlier in my earlier episodes, all this greatest fear that's going on make Chinese tech very uninvestable and all that. Fed coming out with all these um, warnings and all that for compliance with those their annual reports and all that, i.e. revealing who are the beneficial owners and all that. So then we talk about the good catalyst, which is the share buyback, seizable share buyback, which comes to around 20%, 10%. Just want to show you the market cap of the company is wait, let me just show you. The total market cap is about 300 million. So if they are buying over 25, it's nearly 10, about 8%. So if you discount that, if they cancel those shares, and then that means there's no dilution, but that means your earning per share would be enhanced, and this is actually something good. Only cash rich company can do this. And then number two catalyst, just now we talk about, is Charlie Munger. The number two catalyst is about the relaxation of the clamping down, the escalating situation of the Chinese government on tech, big mega tech companies, partly because they might see this as national security. And then, of course, the third biggest catalyst is, as I think everyone knows, e-commerce and their e-commerce business are gaining footprint each and every time in Europe, Southeast Asia, and America, and they could be doing better. And then the number four, as I mentioned earlier, is actually cloud, data storage. Data storage is getting more and more important now. And is considered like a national security issue as well, after the experience of the Russia-Ukraine war that gives warning to everyone. If you want to start a war, be careful. You might get financial sanctions and you might get technology sanctions. So so this is that's another thing I mentioned. So the fifth one I'd like to share is about SoftBank. SoftBank, they are actually a major shareholder of the company. They own actually over a few billion shares, and they have sold 20, which actually isn't much, but they plan to sell more this year. And I think this is part of and parcel of the Chinese government's plan to buy the stocks cheap. That's why they start all this climb down, and to have more governmental control, and also to avoid foreign ownerships, to reduce now all foreign ownerships, so that in the situation when there is a geopolitical tension, whatever it is, could be trade war, cold war, actual wars that happens. This is something that they will be protected lah. So okay, this is I just wanted to share with you that American Depository Exchange, ADS, is applicable to every type of company. It can be Japanese company like Toyota and Honda that's listed over there. And this is the current stock right now. I think I've earlier showed you as well. You just look at we just touch on the negative catalyst and look at how another dire straight company like Evergrande and all that, about their debt payments, is Chinese government or Chinese mega tech would dishonor international agreements, like, for example, let's say allowing the company to go delisted, and then whatever investors that own shares in the ADR, Baba American ADR, whether it's listed in NYSE or over-the-counter exchange, will end up zero. I think the likelihood is very little. Even if you look at this foreign bond that's based in USD, right? Evergrande, the biggest developer, I think everyone knows about this meltdown. They are also agreeing to pay those foreign bonds and service those foreign bond interests. It's just that maybe they tweak a bit. They wanted to pay in yuan instead of USD. So they are not like basically saying that, oh, I don't honor the agreement altogether. So basically, I would believe shareholders of this ADR. I mean, Chinese companies that are listed in US. Of course, the Luckin got coffee massive crash that caused it to delisted. I think there were a couple that has happened before based on precedent. That was because there was a major manipulation fraud in terms of the revenue figure and all that. Not just there's situation like Baidu and all that. Just basically non-compliance. They are not really talking about fraud situation. We will look at the risk. Basically there are three risks. There's no mention about delisting risk, meaning your money with invested becomes zero, exchange rate risk, political risk, inflation risk. These are actually commercial kind of risk, which I think if you buy US companies or Canadian company listed in US but not under ADR, and take note that there are three levels: level one, lowest level; level two, US listed stock exchange. The shares must be registered with the SEC. This is a very good thing, for to protect investors. Especially, I think I'm pretty sure Baba, Baidu, those big techs would either be in the level two or level three. Whereby the issuing company to make stricter reporting rules. So and also allowing them to raise cash. And I think US actually needs China, the second biggest market, to have their companies listed in US. US capital market would suffer if the second biggest market, all the companies do not want to list. And I think there's actually a relaxation already recently in the news.
Every action has consequences. American markets have the same view about China. The Nasdaq Golden Dragon China Index tracks Chinese companies listed in the US. It's down by 58%. The third.
Okay, let's show you this.
It has promised policies that are more transparent and predictable. I have a quote from Liu He. He's a vice premier. He's also Xi Jinping's top economic advisor. And this is what he has said. I'm quoting: all policies that have a significant impact on capital markets should be coordinated with financial management departments in advance to maintain the stability and consistency of policy expectations. The message is clear. Beijing wants to contain the damage. Easier said than done, we say. The Communist Party is facing serious challenges right now. One of them is the latest Wuhan virus outbreak.
Yeah, so I won't go into the Shenzhen all those tech factories closing down and all that. But as you can see, they are relaxing. They did the clampdown in the entire of 2021. And maybe the first quarter of 2022. So and I see, I think they know about the economic damage that they do it upon themselves. I think probably partly also they wanted to kind of like crash the companies and buy low. It could be that, so we never know. But anyway, if you look at fundamental, that's actually pretty good. So Baba, is an OTC stock. It is not, as I said earlier, Baba and Baidu, they are listed in the Nasdaq 100 top companies. Nasdaq 100 is actually the top 100 companies that are most important. So even for if there are going to be other companies that's going to be delisted or suspended or moved to the OTC counters, you wouldn't start with these two. Yeah. So okay, so I'm going to share with you just now about the potential delisting, and actually it wouldn't happen if a company actually does not follow the laws, right? It will be what you call it, convert into OTC counters, so it's still tradable. Something like Luckin Coffee. I'll just go back later lah. Just fine. So okay, then just want to explain to you a bit about the meaning of ADR, American Depository Exchange, before buying foreign companies. You can see Honda Motor is in there as well. You got Heineken, Volkswagen, Toyota. They are all ADRs. So it's nothing special. Whatever that the Chinese company is doing in US. So so this is audit demand. Of course, Chinese a bit. So that this is some of the news. I'll put the link. Yum China, in the world largest consumer market, declined 15% because of all these words uttered from the Fed. Okay, Baba listed in US as an ADR, and then Charlie Munger, as I mentioned, and the recent news released. Charlie Munger, portfolio manager, still drop a news. He's a 96-year-old investor, best friend of Charlie Warren Buffett, increased his position 99.3. Means it's actually double down. That means, let's say you got 100 shares, you actually buy another 100 shares. This is one of their they call Form 13 filings, which is a very transparent in US. It's just that there's a time lag. Whatever they traded, buy or sell, let's say from in a period of Jan to March, they'll report on or before 15th of April. So just take note. I just want to show you a very important article about if there are really non-compliance. It will not be delisted. It will be converted into OTC first, over the counter exchange. So it's like you can see Luckin Coffee is now at the OTC markets. Previously it was a Nasdaq counter or NYSE counter. So it was that at the time the competitor of Starbucks. So Yums China. So Baba share chart, I think I've showed you before as well. So yeah, so I think just want to show you this particular. Yeah. Access to information. I'm going to show you the article that the clause that say taxing. Investors gain investment exposure to non-US stocks without the complexities and all that. Okay. The ratio of foreign companies will represent the same number of shares. It may be listed on major exchanges or may be traded over the counter. ADR homes may be denominated in euros. I read it somewhere that it will go into a OTC exchange instead of delisted right away. So I think that's what they meant by the word suspension. Instead of using the word delisted. So look into all these small prints; they are very important. If I were to find the article, I think it's definitely in one of the links that I've read about so those all the delisting fears that we have here. So if we read the fine prints, it may not happen right away, even if there's going to be really persistent non-compliance. Anyway, this is to 2024 amazing news and no problem with that. So thank you for watching, and please subscribe and click a like to my episodes here. Thank you very much.